Hi and welcome to the Martin Bell Show. Hopefully you've been keeping well, and in today's video we're going to be reviewing the Daily Mail Online, a news article in the money section, and it's about Santander joins mortgage lenders turning off the tap for self-employed with a new 40% deposit requirement. So that means for every £100,000 you need a £40,000 deposit. So if you have a £200,000 house, that means you would need to put down £80,000, and that is a large sum of money. So the bank is restricting new self-employed borrowers to 60% loan value products. I suppose it's because obviously what's happening in the world. They want to reduce their risk and people to have more equity into the house, so that then the bank doesn't have to take too much risk. The banks don't want to lend. I get a feeling that's the case. I could be wrong. It says the move will help it speed up processing of existing applications, because it will probably cut quite a lot of other people out, because that is a large sum of money, 40% of the house value. I think the average house value is around 230,000 for the whole of the UK. I could be wrong, but I think it's around 230. So other lenders have also changed borrowing limits to put stricter checks in place. Mortgage brokers have called the unfair unjustified, arguing that lenders to those with salaried jobs is no less risky than during a pandemic. So saying here, Santander has become the latest lender to impose harsh restrictions on self-employed borrowers, excluding them from its low deposit mortgage deals. Well, I think that's what happened. Slightly bit different than 2008 crisis, but that's when there was ninja loans, when people had no income and no assets, and they was able to take out a home mortgage and no job. And then obviously a few months later it was going up, so they realised, they thought, oh, I buy it now, I can flip it for later, but the carpet got pulled out of the rug, and then that's when some people went to zero, sadly. So yes, I think the £230,000 average house price, so a 40% deposit would mean you would need to put down £92,000 plus all the additional fees. So you're probably looking over 100 grand probably, when you put in moving costs as well, and closing fees and all the other fees that there is. So that is going to stop a lot of people from being able to purchase their homes. So that means self-employed first-time buyers and most home movers will require a 40% deposit in order to qualify for a Santander mortgage. Well, I suppose it, if you could do it, it also does reduce your monthly instalments that you have to pay, but then again you have to save up quite a large sum of money, and that will take quite a bit of time to save up 40% of the house. And as you save, obviously the housing cost will go up as well. So in-class salarised employees looking to purchase a property through Santander can do with a deposit of 15%, which is a bit better. The good news for Santander's existing self-employed customer base, however, homeowners who are already with the bank and are looking to remortgage will not remain eligible for its available deals, whether they are self-employed or not. Santander's new restrictions have attracted criticism from parts of the mortgage industry. I could understand why that would, because that's quite a large sum of money. The trouble with this restrictive policy implemented by Santander is that it is a blunt instrument with little logic or thought, said Jonathan Harris, managing director of mortgage broker Forensic Property Finance. It doesn't make sense that self-employed are considered a greater risk than the employed. Many employed workers are employees of small to medium-sized businesses run by self-employed individuals. And that's very, very true. Especially if you're working in the retail sector or travel sector at this moment in time. That is something to just be aware of. If the self-employed are a greater risk, then what is the logical fate of those employed by them? How are others lenders treating the self-employed? Santander has joined a host of other lenders imposing more stringent requirements on borrowers who fall for themselves. There are more than 5 million self-employed workers in the United Kingdom, and hopefully one day I'll make it 5,000,001. And the major now face tighter lending criteria and affordability rules, which according to HSBC could remain in place well into 2022. In many cases, self-employed mortgage applicants have been asked for bigger deposits and the additional paperwork. Some lenders have lowered the amounts they can borrow, while others have subjected them to longer waiting times and more frequent rigorous questioning. Okay, last week, TSB limited new self-employed borrowers to a mortgage with a maximum loan up to 75%, whilst Halifax placed limits on how much the self-employed could borrow. Metro Bank now requires more bank statements if you're self-employed, and nationwide is limited its 90% mortgage products to salarised employees only. Well, I think it's fair enough to for the Metro Bank to request more bank statements to prove over long periods of time of your salary. I think that's a reasonable request. And lenders have made it harder for self-employed borrowers to get mortgages since COVID struck, said Harris. Well, I suppose they could sit on the sidelines for now if they've got a place to stay and just stack cash until obviously they can wait it out, maybe possibly till that you can deposit a lower amount. As I said beforehand, this is not financial advice. I'm not a licensed professional in any way, shape or form. I am just sharing my thoughts and my opinions. This is for inspirational and entertainment and motivational purposes only. So they will be applying more forensic underwriting by asking for a sight of their past 6 months business bank statements along with projections for their future trading, which is a fair enough request, even if there wasn't COVID. Some are indiscriminately bashing the self-employed by applying dockering criteria for no other reason than the applicant is not employed. Well, if they're bringing the bacon in, as long as they're making the payments and they can manage making the payments, I'm thinking then they should be allowed to take on that mortgage. Obviously they have to take into account obviously the sector that they're in, considering the time that we're in at this moment in time. But as more people get vaccinated, hopefully we will get out of this soon. So according to Santander, the decision was made to help speed up existing applications. We regularly review our products to manage the volume of applications we receive, said Graham Seller, a head of business development at Santander. Due to additional paperwork involved, applicants from self-employed customers can take longer to review, and our recent changes will ensure we can progress existing applications as quickly as possible. With the 31st of March stamp duty holiday deadline edging closer and the new lockdown causing logistical issues, many lenders are under operational strain. Santander has decided that employed borrowers are simpler and easier to deal with at this stage, said Andrew Monlake, managing director at mortgage broker Corisio. It appears that they do not have the people of time to deal with more onerous and complex underwriting that self-employed applicant requires. So that's because they probably have reduced staffing, so you can see why they done it. It may not be 100% fair, but you can understand why they have done it. But Nicholas Murray, product technical manager at mortgage broker John Carroll, said that the financial security of employed people at the moment was hardly guaranteed. There are many self-employed people whose income has remained unchanged throughout the pandemic, and excluding them like this seems unjustified, he said. Applications should be considered on the individual's merits, which I think that is true, and they should be, but obviously you have to be realistic as well, because we are living in different times when there can't be full staffing, because social distancing has to be maintained in the work environment, so they won't be able to take the full staffing to take all these applicants. So you can see why So you can see why, but I don't think it's 100% right. And to cherry pick borrowers seems unfair to those whose financial situation is as good as an employed person, who could just as well be furloughed or work for a company about to go into administration. What is the advice for self-employed borrowers? There are still mortgage options out there for self-employed people, but they must be harder to find. For some reason, brokers said it was a good idea to speak to an independent advisor. There is still choice available for many self-employed borrowers, although those in certain industries such as the travel and entertainment will find it harder than most, said Montlake. Which is understandable because most of them are currently probably not working or on furlough with some government assistance. So lenders will want to see more documentation to have your latest accounts, 6 months, business bank statements and projections all to hand, which is a fair enough request. And be prepared to be asked if your business trading has been affected by the COVID-19, and if so, how things are going to change, which is a fair enough request. So a lot of these comments are about the older generations bashing on the younger generations. How about that? They couldn't be able to cope with a high interest rates and high deposits. So I'm not a fan of bashing of different age groups, but you can kind of understand where they're coming from. That they did have high interest rates going quite high, I think, at one stage. But interest rates have been low for a very long time. I'm not sure if interest rates will go up, or they might actually even go negative. I'm not sure, but I don't think they'll be going back to like what when I was younger. When it was like 5%, just like a current account giving a 5% interest rate. I don't think that'll be coming back anytime soon. So if you enjoyed this sort of content and you want to see more, then please feel free to subscribe to my YouTube channel, and you'll get notified if you click on the bell notification button when I next release a video, or even if I go live. I don't just make content on the news, I also make content on my investments that I'm actually making, the growth of my portfolios, my SIP, which is my self-invested personal pension, my ISA, which is a tax-sheltered stocks and shares ISA, as well as we just play some video games. Sometimes we talk about investing, and sometimes we just relax and play some video games. So hopefully you like this content. Remember to hit that like button, it really helps the algorithm know that you're liking the content and getting it out to more people. Thank you for watching, take care and have a great day.